Hello everyone, welcome back to Believers IAS Academy, Bangalore. This is the everyday prelims previous year question discussion, target 2025. In these sessions, we will be analyzing previous year questions so that you can be better prepared for the 2025 prelims. So, in this discussion, we already completed 2024 prelims previous year question discussion, and we are continuing with the 2023 previous year analysis question. And in 2023, we already completed polity, geography, and history. And in today, we are going to continue our discussion in the 2025 paper regarding economy. Okay. So, in 2023 prelims, there were 16 questions from economy. Okay, 16 questions from economy, from current affairs, static, Indian economy, etc. etc. So in this video, we'll try to analyze the question paper and we'll try to find out how we can easily attend these kind of questions. Okay, without any delay, we'll start this one. So question number one, the question number one was, consider the following statements. The interest income from the deposits of infrastructure investment trust, that is InvITs, distributed to their investors is exempted from tax, but the dividend is taxable. Statement 2, InvITs are recognized as borrowers under securitization and reconstruction of financial assets, enforcement of Security Interest Act of 2002. So you have to see both statement. Option A is both statement 1 and 2 are correct. Statement 2 is the correct explanation of 1. 1 and 2 are correct. 2 is the correct explanation of 1. 1 is correct but 2 is incorrect. 2 is correct, 1 is correct, and 2 is incorrect. Okay, so the correct answer here is D. Statement 1 is incorrect and statement 2 is correct. Okay, InvITs are indeed recognized as borrowers under Surface Act. However, interest from the deposits of InvITs are also taxable. They are not exempted from the tax. They are also taxed, as well as the dividends also. So interest income of the InvITs, interest income that the InvITs get from underlying SPVs and passes on to unit holders is taxed in India. The dividends that the InvIT pays is also gets taxed. Both interest and the dividends are taxed by the income tax law. Okay, so in India, whatever you gain, whatever is there, it will be taxed. So this is applicable where InvIT has opted for taxation under section 15 BAA Act of BA of the Act. So hence statement 1 is not correct. Then InvITs are recognized as borrowers under Surface Act of 2002. The Surface Act and the recovery of debt have been amended. Now the pooled investment vehicles such as InvITs, RVITs, etc. etc. can be considered as borrowers under these laws. Now they are also considered borrowers under these laws. This means that a debenture trustee for listed secured debt securities issued by an InvIT or REIT can use the protections and enforcement mechanisms under Surface Act. And statement 2 is also correct. Initially, they were not considered as borrowers. What is the advantage of being borrowers? If you are a borrowers, then you will be given higher priority in terms of filling up the repayment of your payment. Okay, investment in Surface Act. Okay, in case the company goes bust, in case the company is in loss, in case there is a chance that company is going to be liquidized, okay, in case the company is going to be insolved, okay, in those conditions you will be given higher priority in terms of repaying your investment. So the correct answer is D. Statement 1 is incorrect. Here you could have guessed, use the common sense. Okay, in India where everything is taxed, is the government going to miss the taxing of InvITs? No, right? So government is obviously going to tax InvITs. So the statement is 1 is wrong. Second one is, in the post-pandemic recent past, meaning post-COVID-19, many central banks worldwide have carried out interest rate hikes. Statement 2, central banks generally assume that they have the ability to concentrate or counteract the raising consumer prices via monetary policies. So here correct answer is A. Okay, the correct answer is A. That is, in the post-pandemic recent past, many central banks worldwide carried out interest rate hikes to contain poor pandemic inflation. Okay, so interest rate, it is one of the tools under like central bank's monetary policy. Here, if there is inflation in the market, and then there will be deflation. If there is inflation in the market, the interest rates will be increased. If there is deflation, interest rate will be decreased. This is because in inflation, more money is at the hands of people. Okay, more money is at the hands of people. As a result, demand is more. As a result, people are trying to buy more at the higher rate. So it is due to inflation. So in order to suck the money from people, okay, in order to suck the money from people, suck the money from market, what the government is going to do, or the RBI is going to do, it is going to increase the interest rates. Okay, in case if you are taking loans, the loans will be interest higher. In case you are depositing in the bank, interest rate will be higher. Then you are going to you feel like you are going to get more out of this more income out of your deposits. So you are going to deposit, reducing the present income. Okay, reducing the present money cash flow in the market. Okay, in deflation is people have less money, money is less, production is more. So in those times, money is losing the value. So as a result, what the government is going to do, or RBI is going to do, is it is going to reduce the interest rate. So it is going to reduce the interest rate in the sense, now you can borrow from the government, borrow from the banks at a lower interest, and people, instead of depositing in the banks, people are going to spend that money, because even if you deposit, you are getting only a lower interest rate. Understood, right? So now it is going to improve. Like now the people are going to spend more instead of depositing it in the bank. Okay, so statement 1 is correct. Now statement 2, the central banks generally are mandated with the task of containing the rising prices of commodities. Central banks use monetary policies to manage economic fluctuations, achieve price stability. What is economic fluctuation? It is nothing but another word for inflation and deflation. Okay, inflation and deflation. So there are many policies or many tools under monetary policy of RBI, such as inflation, interest rate, okay, open market operations, like repo rate, reverse repo rate, etc., etc. The RBI is going to either raise or reduce depending on the need for the outcome. Okay, depending on the outcome, it is going to either use contractionary policies or expansionary policies. Okay, then consider the following statements. Carbon markets are likely to be one of the most widespread tools in the fight against climate change. Carbon markets transfer resources from private sector to state. Here, both the statements are right. Okay, both the statements are right, but statement 2 doesn't necessarily explain the statement 1, because carbon markets, you are going to trade carbon stocks. Okay, you are going to trade carbon between government to government, private to government. Okay, you are going to trade. You are going to reduce the carbon emission through this carbon market. So it is a widespread tools against fighting the fighting climate change. Carbon markets transfer resources from private to sector to state also, but it doesn't explain being the it is not the proper reason of statement number 1. Here, carbon markets for years short of puff have at least become one of the most widespread tools in the fight against climate change. By the end of 2021, more than 21% of the world's emissions were recovered by some form of carbon pricing, up to 15% in 2020. Hence, statement 1 is correct. Like taxes, carbon markets transfer resources from the private sector to the state. Hence, statement number 2 is also correct. But statement 2 does not explain the statement 1. This is the correct answer according to the UPSC key answer. Okay, you can interpret in many ways, but according to UPSC key answer, this is the correct answer. Then, which one of the following activities of the Reserve Bank of India is considered as a part of sterilization? Okay, so A, conducting open market operations, oversight of settlement and payment systems, debt and cash management for the central and state governments, regulating the functions of non-banking financial institutions. So the correct answer here is A, that is conducting open market operations. Okay, what is sterilization? Sterilization, it is nothing but another measure or another monetary policy of RBI where it wants to reduce the money supply. Okay, reduce the money supply in the market. Okay, it wants to suck out the money from the market. It wants to reduce the inflation. So sterilization is used in the extraordinary situations where there is hyperinflation, where there is more money at the hands of people. Okay, during that time, what RBI does is RBI uses repo rate and reverse repo rate or interest rate, etc., etc., under open market operations, and it will try to suck out the money from market. So it wants to reduce the inflation. Okay, in case because of various measures of government or various imports, okay, or various exports, there is going to be more number of money which is coming into the market. So it has every chance that it is going to be inflationary in trend. When it is inflationary, it is going to impact the government as well as consumers. So in order to reduce this ill effect of interest rate or inflation, RBI is going to use this sterilization method. So here the correct answer is A. So sterilization refers to the process by which RBI takes away money from the banking system to neutralize the fresh money that enters the system. Okay. So normally fresh money in the sense if there is a new money printed, this sterilization previously happened during demonetization. Okay. When there was demonetization, like all the old money was taken away and new money was flushed into the market, and the banking system was had more excess of money. So in order to suck away this excess of money, RBI introduced sterilization during that time. So classical sterilization involves central banks conducting buy and sell operations in open markets. Hence option A is correct answer. Option A is the correct answer. For sterilization, RBI usually adopts a market stabilization scheme. Okay, market stabilization scheme is the surplus liquidity arising from large capital inflows is absorbed through sale of short-dated government securities and treasury bills. Okay, in general sterilization or classical sterilization, what you do is you are going to conduct buying and selling operations in open market. But normally in market stabilization schemes, what the RBI does is it will sell short-dated government securities. When you sell the short-dated government securities, people are going to deposit money in the bank, or people are going to deposit, banks are going to deposit in the hands of RBI. So it is going to reduce the money flow in the market. So it is ultimately achieving the objective of reducing the inflation. Okay. Then 45. Consider the following markets. So government bond market, call money market, treasury bill market, stock market. How many of the above are included in capital market? Okay. In economy, in market, there are two types of markets. One is money, another one is capital. Okay. The main difference between this is time period. In money, it will be less than 1 year. Okay. The term of the tools are less than 1 year. In capital, the tools term will be more than 1 year. In this option, call money market, it is generally of 1 day, 14 days, 48 days, 91 days, etc., etc. So it is less than 1 year. So it is not a capital market. It comes under money market. Then treasury bill market. Treasury bill market, it is by central government through RBI. It will be time period will be around 91, 182 days, 364 days. Okay, it is also less than 1 year only. So this is also wrong. So the correct answer here is government bond market and stock market. So only two. These are beyond 1 year. Then government bond market is a part of capital market, and statement 1 is correct because the government bond will be for longer period of time, more than 1 year, whereas treasury bills are for short-term liquidity mismanagement matching. Okay. Then call money market is the rate at which short-term funds are borrowed and lent in the money market. Statement 1 is 2 is incorrect. Treasury bills are short-term debt securities issued by the government. They have a maturity of up to 1 year and are considered to be safest type of money market instrument. Then stock market is part of capital market, hence statement 4 is correct. Then question number 6. Which one of the following describes the concept of small farmer large field, SFLF? So here the correct answer is B, that is many marginal farmers in an area organize themselves into groups and synchronize and harmonize selected agricultural operations. Here or normally what happens is in India, because of fragmentation throughout the generations, okay, what happens here is you are a single person, but you have many children. As a result, whatever the land you own, it is going to be divided among your children. So if you own 5 acres of land, and if you have 5 children, your 5 children are going to get only, your children are going to get only 1 acre per head. So the what we say, the land holding or the land owning capacity is reducing. So it is getting fragmented. As a result, even if you are growing some kind of crop in your small field, it is not going to impact the economy as a whole, because it is going to be substantive agriculture. You are going to reap something out of the farm only for yourself. So in order to reduce this kind of fragmented agriculture, there was a scheme called as small farmer large field. Even if you have a small farm, you should come together. Many farmers with a small field should come together, organize themselves, and then they can grow a common, what to say, common crop together. Then they can share the profits according to the proportion of the land they involved there. Okay, that is called as small farmer large field. So small farmer large field is an agri model to overcome the disadvantages faced by millions of small and marginal farmers due to diseconomies of scale and lack of bargaining power in the supply chain. This model is participatory and flexible and allows small farmers to benefit from achieving economies of scale by organizing themselves into groups and synchronizing and harmonizing selected operations. Okay, you could have guessed here, you could have used the common sense. If you read the other options are not so suitable for this statement here. So the correct answer is B. Then 47, consider the following statements. The government of India provides minimum support for Niger, MSP for Niger, also called as Gizoitia abyssinica. Second, Niger seed is cultivated as a kharif crop. Some tribal people in India use Niger seed for oil cooking. So here all the statements are correct. Niger in Karnataka, it is like Gurellu, Ellu. Okay, North Karnataka it is called as Gurellu. In South Karnataka it is called as Puchellu. It is like black in color. Okay, so it is in government of India does provide MSP for this one, and Niger is cultivated as kharif crop, and many tribal people use India like use Niger seed for cooking. This Niger seed is used in North Karnataka also and many other prominent societies also. So here the statement is C, all the three. MSP for Niger seeds, and statement is correct. It is cultivated as kharif crop, and the tribal population uses the seed for cooking, the press, cake, post oil extraction as livestock feed, and also consume the seeds as a condiment. Statement 3 is correct. Then 48, consider the investment in the following assets: brand recognition, inventory, intellectual property, mailing list of clients. Which of these are considered as intangible investments? Okay, in a business there are two types of investment. One is tangible, another one is intangible. What is tangible? Any investment which you can touch and feel it, which you can touch, whereas intangible you cannot touch it. Touch is not possible. So here see, brand recognition. Can you touch the brand recognition? You can touch the brand logo or other things, but can you touch the brand recognition? No, it is intangible in nature. Then intellectual property rights. Intellectual property rights also, it is intangible nature. You cannot touch the rights there. Then mailing list of clients. It is present in the computer or it is present in some form of documents. You cannot touch the list there. So these three are intangible. Now inventory. What is inventory? Inventory involves any kind of equipment. Okay, any kind of equipment. These are called as inventory. Can you touch an equipment? Okay, this is an equipment. You are able to touch it, right? So this becomes a tangible inventory. Okay, this becomes a tangible investment. So here the correct answer is C, only 3. The assets that cannot be touched are known as intangible assets, and they are non-physical in nature and can be used for a year or more, and the list includes brand value, goodwill, and intellectual property rights like trademarks, patents, and copyright acts. A tangible asset is an asset that has physical substance. Examples include inventory, a building, rolling stock, manufacturing equipment, etc., etc. Hence the statement 3 is correct one. So in today economy we will finish off with 8 questions. Okay, we'll finish off with 8 questions. We'll do the rest 8 questions tomorrow in tomorrow classes. Okay, if you have any doubts regarding this one, do write in the comment box. If you gained anything out of this one, please hit the like button, also comment on it and share with your friends. If you are new to the channel, subscribe to the channel and also click on the bell icon so that you don't miss these kind of videos. With this, I'll end the video. Jai Hind.